Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for the remainder of the week. First of all, I did close out these 295 calls here on Tuesday on this gap, waited 5 minutes to see what was going to happen, and trailed me out at 48. Just a failed trade. I should have taken some off there at the end of the day on Friday. Got a little greedy. Shame on me. It is what it is. Tuesday, price action opened up lower. Looked like it was holding support at the 8 EMA. Came up, put in a new higher low in relation to this day, and I went ahead and tried to buy over the previous high. That trade ended up not working out and trailed me out down here almost near dead lows of the day. Even after being frustrated a little bit, went ahead, took another stab at this play, got on the same 290s here at 204. End of the day, took half off at 218, trailed me out today on the open at 193. So my swing plays for S&P 500 that I'm trying to take for at least a few day hold, maybe even a week, have not been working yet, but I will continue to trade my levels as they set up. Fortunately, a lot of things are working elsewhere, and we'll see what happens going forward. Now, zooming out here to a higher time frame and the plan I'm looking for tomorrow. First of all, we put in a new all-time high. Price action is now pulled back, hasn't gapped down, has not voided any significant levels in my opinion yet, so does not look like a reversal is on the horizon. Now granted, the bears are winning. They've managed to push price action down, we'll call it $3. Congratulations, you got your 1%. Now the bulls are probably going to take back over at some point. Ideally, at a support level such as this 286, 287 area, I will look for 287 calls with 2 weeks of time. If it doesn't dip down there again, I will look for 290 calls on a breakout / continuation above this channel that is now formed. Below here, I'll also be looking for 282 calls about a month out in the future at the 50 SMA, which is also right in this previous gap. If price action does manage to flash crash all the way down to 200 SMA again, I will take 275 calls about 4 weeks of time and see where those all work out to. Over here on the daily time frame, let me zoom out here to the weekly real quick. You can see price action has formed this W that I've been talking about for months. We've come up very, very close to this price target, and we're simply consolidating. Nothing showing rejection yet, and if price action does start to reclaim this week's open, which is at 289.84, bears have absolutely no control, and will probably start running for the hills anybody that is short in the S&P 500. Now on this daily candle, at least the last couple daily candles, you see a very, very long lower wick. Now, bears have managed to push price down. That's what created the wick. However, buy the dip is still very much alive, and there's a lot of support buyers that are trying to play for this gap. So we'll see how strong they are going forward. If price action opens up and pushes down below there, there will be stops down there to be triggered, and they'll probably set off a little bit of a cascade effect and start rolling through some of the stops that may be below these other candles and come back down to another significant level of support, most likely in this range, maybe even to the 50 SMA. Either way, there's plenty of levels below price action. We're still making higher lows and now higher highs, and in my opinion, we are definitely in for another leg up. If you have any questions or comments, please feel free to leave them down below. Feel free to come join us over at the Trade Crew chat room. It is a free chat. Have a good evening and good luck.